for FEB. Just marked up the open of New York, and it's gone down to the hourly fair value gap, which when it first opened, usual thing, I thought, oh, there's no way it's going to go that far, and it does. So now I'm just waiting to see if there's going to be a pullback to somewhere around here, the 62. I've actually reversed this one because I seem to work better with bullish markets, but obviously this is looking bearish at the moment, so I flipped this chart. It's easy to see that it's broken the old high, which is a low. It's created a fair value gap, just waiting for this candle to close on the 15-minute. It's only just opened actually, so got quite a bit of time. Put on the fair value gap on here. There's nothing on the 5-minute apart from this small one here. Still plenty of room to go down to the fair value gap down here before it goes up. So this pull back and then pull down. It's weird to see it coming up the other way now. For some reason my drawings are no longer feeding through to the 1 minute, but anyway, oh there you go, there it is, it has appeared, cool. That's pretty much where I wanted it to be. So I put through the market order. So my idea was this is the mitigation block. So, and there was also a small gap here too on the MT4, but not on TradingView. There was a fair value gap here, which is now filled out. Could go back up to here maybe. But so far going down, it did kind of respect these little small moves, being that there were a number of moves there. I'm hoping that this will be the slightly bigger pullback to go down. If it breaks that, then obviously it's going to be changing direction. But that's another point of interest there. Really nerve-wracking watching this because obviously it's so close to the being stopped out already. There we go, stopped out. So that is not correct. Move that down to, oops. Move that down to there. This back up to here. So of course this could be, I mean it's broken a high there on the open. It's now done a liquidity sweep, but it hasn't quite taken out everything from the London Open. But it has obviously taken out this liquidity here. So it would need to break above this high. I mean, there's no other fair value gaps here now apart from this one, which would be way past the 79. So I could try a re-entry now with that as the highest point. Just go for that. Look at that, it's exactly the same place. Give myself $100. So that one's still live. and got stopped out. Let's see what happens. So it looks like it's going in the right direction. I'm going to walk away from the computer now and make myself a nice green tea and just leave it. Got my alert set for just past that, so I should get an alert on my phone. And let's put the stop loss in as well, so I'll get an alert either way. Walk away. So I just got my alert to tell me I've been stopped out again. I mean, it didn't even get close. So, I mean, there was no fair value gap here. That's the only one at the moment. Maybe that's what I should have waited for. I mean, looking at that on the 5 minute now, it looks like a bearish flag. And it's following my pullback almost to the point. So at the moment, it's now got equal highs, which is where my stop loss was, that it's just gone past. Last one, and then I'm giving up for today. Because I mean, look at the difference. It's just infuriating. So set that, set my alerts, and walk away. So it took a while, but I did get a notification that the trade had hit one of my alerts and it passed. I mean, look how close it was originally. I'm so glad I walked away. I just wouldn't be able to handle that kind of stress. But yeah, there you go. So winning trade today. After 2 losses, so break even ultimately. And just move that to the back. So yeah, there you go. That's it. Done for the day. Gonna take a break. Of yesterday's trades that I took, I had the idea that maybe working on the 1 minute for me at the moment is just, it's too low level. I need something a little bit higher level, because at the moment I'm jumping in too early and it's causing me to get stopped out. So I had a re-look at the chart. So this was the original entry point. I'll show you on trading view. Obviously I've marked it all up now. So this was the area of interest. This is New York Open, and this would have been, let's have a look. Oh no, actually that's New York Open, 9:30. So it would have been spot on the New York Open that the relative equal highs were broken. So if I do my standard marking up, setting alerts rather for the recent swings, highs and lows, that would have alerted me to the fact that that swing had been broken. I could have had a look at the chart. Yeah, that's kind of a relatively equal high. So yeah, that could have been a small liquidity sweep. So what I did is I went through all the charts and did the different time frames. So on the 15-minute time frame, here is the previous swing high, relatively equal highs, a little bit of consolidation here, which is to be expected after a big move, before a big move. It breaks this swing here, so that would have been a liquidity sweep. There is then a dynamic candle, so still sticking to the 15 minutes, and then a pullback. So it would have been at this pullback on the 15 minutes. So we've already got, 30 minutes past the initial open, and that would have been the point when I should have then switched down to lower time frames. So there's my initial markup at that time frame. So looking at this is the candle that I see the dynamic entry, and then marked up a vertical line on the candle that pulls back. Relative equal highs broken, swing low broken, and mark up a FEB to the low point here. So this is the optimal trade entry point, 70.5. Looking down onto the 5 minute, there is a small fair value gap that has appeared here, but you can just about see there's a tiny gap between this fair value gap and this candle. So it did tap into this tiny fair value gap, but it would have been quite small. So depending on whether or not it had a big spread on that particular broker as to whether it would have actually picked up this trade if I had put my entry point at this FEB. But it does go almost all the way back to 79, but it definitely obviously hits the 70.5. So the optimal entry, 70.5, would have been hit easily twice. I think this was my actual entry on the 1 minute that actually worked. I did do 2 previous entries which failed. So this is my plan, is to try higher time frames to stop me from taking early trades and make me hold the entry a little bit later. So yeah, this would have been a perfect entry as long as the spread was small. Just here, because it would have hit in as the candle went up, like that. So that would have been an A+ entry. It could have been, although the fair value gap was here, I could have set it for the optimal trade entry point, 70.5, given me the stop loss of the previous swing. And that would have worked out too. That would have been a good trade. So down to the 4 minutes. 4 minutes, there is no fair value gap. So technically this would not be a valid entry, because this candle and this candle basically match almost perfectly, I think. So there would not have been an entry on the 4 minute. Down to the 3 minute, bigger fair value gap, much clearer entry point. but it doesn't tap into it. So again, the entry here would need to be the 70.5. Ignoring the fact that there's a fair value gap, the entry has to be the optimal entry point of 70.5. Down to the 2 minute. This looks like it would have been the best entry point as regards to it tying up with everything else. So the fair value gap was down to here, but it had already taken a bite out of it. Now that would have put me off originally, thinking that, oh well, it's done it once already, it's not going to do it again, and it doesn't. It misses it by 1 point. But if I had taken the optimal entry point of 70.5, it would have picked up here and swung down, pulled back. So that would have terrified me. But then it got another 1, 2, 3 entry points where it could have picked up the optimal entry of 70.5. But it didn't tie in with the fair value gap. It did. I guess it did. But the thing that would have put me off is it had already tapped into it. But if you put down the entry point down to the original fair value gap entry, it does give you basically 3 bites of the apple before it pushes right down and breaks the swing low. Down on the 1 minute, this is where I started to get confused, because you have fair value gap here, a fair value gap here, fair value gap here, which was much bigger, another one here. So you can see I'm starting to get flustered over which entry point. So I think the original one may have been here, and then another one here, but none of them played out because this stopped out or this stopped out that one. So this is basically what was causing me the biggest problem, is that there were too many fair value gaps appearing in this pull down, this initial dynamic candle. So I think my rule needs to be, if there are too many, you need to go up a time frame where there's going to be fewer fair value gaps and a higher chance for me to actually identify which one I should aim for, and also aiming for the optimal entry point and allowing the swing back to the previous swing. So the stop loss is right at the back of the original dynamic candle, instead of taking these intra ones, which it hasn't played out yet. It hasn't changed and started a trend in that direction yet. So taking it an early bite at the apple here is just going to trip me up. So the 1 minute, there are lots of fair value gaps, but it's very confusing as to which one I should be picking, for me anyway. And then finally, if I had, which I would probably never do, but if I had held on to that trade on the 2 minutes with that stop loss back to the original swing, that going down to this swing low here and then this final swing low here, that would have been a 10R. I mean, I'm never going to hold all of that with that confidence, but it's just very interesting to see. It easily would have passed any challenge. And then finally, if I had taken this initial trade and taken the 2R, or the first swing, and then continued to watch it, there were multiple entry points on the 2 minute time frame. There was another entry point here where it came back into the fair value gap, and that would have been, interestingly, all these trending ones, it never goes really much further past the 50%. So with the trending ones, you do have to bear in mind you're not going to get the optimal entry point. You're only going to get 50%. And I think that's something that has quite often prevented me from getting into a trade when I've been in a trending market, because in my mind it needed to go back to 70.5, but that's the initial move, the initial reversal basically, or the initial move after Asian consolidation and even London consolidation. So if it is in a trending market, it's only going to go back to 50%. So there would have been the initial entry, maybe one there, maybe one there, maybe one there, and these are all taking basically FEB entry points. This one pulled back a little bit more, but it still didn't hit that swing, the previous swing. And then finally here, again, another 50%. So there we go. Very interesting review today, I think.